The Middle East conflict is quietly chilling China's export engine. Rising energy costs and potential trade route disruptions are testing its economy. 0.15 to 0.45. China's economy has shown signs of recovery. But this new geopolitical instability adds a complex challenge. It's a strain on an economy that relies heavily on exports. 0.45 to 2 o'clock. China's manufacturing sector is feeling the pressure. It's the bedrock of its export-led growth. Beijing has navigated past challenges before. Think of the U.S. China trade war. But this current situation is different. Fluctuating oil prices directly impact costs. This squeezes profit margins for factories. Transportation costs also go up. Any disruption to shipping lanes is a major threat. Raw materials might not reach China. Finished goods might not reach their buyers. This threatens factory orders. It also threatens jobs. This adds an external drag to domestic issues. China's economy is already dealing with internal challenges. The Middle East conflict makes things harder. It's a systemic risk. It undermines the global trading system. 2 to 3.15. But this crisis also presents opportunities for Beijing. It's a chance to boost its international standing. China often positions itself as neutral. It tries to mediate regional disputes. This current crisis lets China play a bigger role. Beijing has strong economic ties in the Middle East. It can use these ties to influence solutions. This could improve its geopolitical credibility. It also helps China diversify its markets. It reduces reliance on Western economies. It strengthens partnerships in Asia and beyond. So, the economic strain might be a calculated risk. It's a pursuit of greater strategic autonomy. It's a bid for more global influence. The export engine faces headwinds. But Beijing might see a chance for bigger gains. 3.15 to 4.15. China's rise is tied to being the world's factory. Its export infrastructure is vast and efficient. The U.S. trade war tested this model. Tariffs were imposed on billions of dollars of goods. China adapted remarkably well then. Manufacturers shifted production. They found new markets. They absorbed some cost increases. But the Middle East conflict is different. It's not a direct trade dispute. It's a systemic risk to energy markets. It's a risk to global supply chains. This underpins China's entire trade system. So what happens next? One scenario is de-escalation. This would ease pressure on energy prices. Trade routes would stabilize. China's economy could continue recovering. Another scenario is prolonged tension. This means higher energy costs. Supply chain snags would worsen. Chinese manufacturers would face higher expenses. They might pass costs to consumers. This could dampen global demand. A third possibility is China mediating actively. It could leverage its diplomatic and economic influence. This could lead to a resolution. China might emerge with greater regional standing. But this carries its own risks. 4.15 to 5 o'clock. The Middle East conflict highlights global interconnectedness. It challenges China's export-driven growth. Rising energy costs and supply chain risks are key concerns. Yet, it also offers chances for more geopolitical influence. As geopolitical instability grows, will China shift its strategy? Will it move from export resilience to a more proactive role? A role in shaping the international order? What do you think? Let us know in the comments below. And if you want more analysis like this, be sure to subscribe. Hit that notification bell so you don't miss our next video. Thanks for watching.